What's up, traders? So today I'm going to show you two different space companies that are set to go to the moon. Now, if you're not familiar with the channel, my name is Rashad. I am a full-time options trader bringing in multiple six figures a year, and options trading has been my primary source of income for several years now. But let's get down to business. So out of the two space companies that I'm going to show you, one I'm moderately bullish on and one I'm very bullish on. So make sure you stay to the end so you get all the info. But the first company is Rocket Lab, ticker symbol RKLB. Now we can see here I have Rocket Lab's chart pulled up, and it looks like it IPO'd in 2020. But since then, it kind of went up during the short term, but then it has gone down, and then it kind of traded within this range here for the last several years. But if we look here, this is a monthly chart. So the last 6 months, it has gone up quite considerably. From a low of, let's see, $3.65 in May to now clearly $10. So it currently has huge momentum, but let's take a look at why they have this momentum. So here I have a news article pulled up called "Should You Invest in This Space Company Before It Goes to Mars?" By Bar Chart. So if I quickly read over here, it says Rocket Lab, valued at $4.78 billion, is a space company that provides launch services and space system solutions for the space and defense industries. It also offers spacecraft engineering and design services, spacecraft components, spacecraft manufacturing, and other spacecraft and on-orbit management solutions. Rocket Lab serves commercial, aerospace, prime contractors, and government customers. The company went public in late 2020 and soon touched an all-time high north of $21. Today, the space tech stock trades 53% below record levels, despite surging close to 80% in 2024. Let's see if investing in Rocket Lab stock makes sense at its current valuation. Now, this next section will tell you why it has gone up so much over the last 6 months. So Rocket Lab wins a NASA contract. Last week, Rocket Lab announced it had been selected by NASA to conduct a study to retrieve rock samples from Mars and bring them back to Earth. The mission will fulfill some of the highest priority solar system exploration goals and may revolutionize our understanding of the red planet, eventually providing answers to whether life existed on the Martian surface. Rocket Lab's study will be delivered for a fraction of the projected program cost and be completed several years earlier than expected sample return date in 2040. Rocket Lab founder and CEO Sir Peter Back stated, "Retrieving samples from Mars is one of the most ambitious and scientifically important endeavors humanity has ever embarked upon. We've developed an innovative mission concept to make it happen affordably and on an accelerated schedule." All right, so there you have it. They just recently received a huge NASA contract. But let's see what the analysts are saying. So out of 13 analysts total, they collectively have it as a moderate buy currently. And if we go up here, we can see they have a high target of $11 and a mean target of $7.70. And as we know, it is currently trading around $10. So now that we have this information, how would I trade Rocket Lab using stock options? Well, let's head over to the options chain. Now, there are two different types of options traders. There are option buyers and there are option sellers. Me personally, I'm an option seller because I like the high probability of profit. And I like to receive income on a regular basis in order to pay for my lifestyle. And most of the students that I teach are typically looking for extra income to supplement their 9-to-5 job or to fully replace their 9-to-5 income in total. So as an option seller, and with Rocket Lab's stock price being so low, I would like to sell puts at a lower price in order to possibly buy the stock at that lower price at a future date. So let's look back at the options chain. If we scroll down to the put side, and I currently have expiration 31 days out from now. First thing I do is I come over to the delta column, and the delta is just the probability that the event occurs. So if we scroll down here, we can see this $8 strike here has a delta of 0.16. So it is saying that there is a 16% chance that Rocket Lab's stock price drops down to $8 within 31 days. So essentially you would have an 84% probability of profit. And I personally like to stick between deltas of 0.10 and 0.20, especially for stocks that I'm moderately bullish on. And so if we look over here, we can see we will receive about $28 for selling this put. Now, once we sell this put at $8, as long as Rocket Lab's stock price stays above $8 throughout the 31 days, we can just move on with our life, we keep our money, and we can continue to sell puts over and over and over again. However, if Rocket Lab's stock price drops below our $8 strike, then we will be forced to buy 100 shares of the company per contract at that $8 price, which should be a win-win situation for you if you already like the company anyway. You know, it's no different than going to the mall and seeing a pair of shoes that you really like and they're currently priced at $200, but then you come back a month later and now they're priced at $150. Well, why would you not like those shoes any longer when they're at a cheaper price? That is the exact same thing we're doing with this business. But this time we're getting paid to wait for the price to drop and then we're buying it on sale. Now, if you want to be even more aggressive and you want to get even more income, you could do a higher strike price. So you could do this $9 strike and receive $58 per contract. Or you can even do the $10 strike and receive $110 per contract. And that there would be over a 10% return in just 31 days. The market in total averages 10% for an entire year, and you just receive 10% within 1 month. Now, how would I trade this if I was an option buyer? Well, the first thing I would do is come up here and I would select a much further out expiration date. If you are an option buyer, then you should always be selecting expiration dates at least 90 days in advance because of the depreciating time value. Once a contract gets within 90 days, the time value starts to depreciate much quicker. So you need to select dates much further out. So if I were an option buyer, I would probably go out about a year or so. So let's look at this date here that is 338 days out. I would come over to the delta column and now I want to pick a delta that is reverse of what I did with the option selling. So with option selling, I usually pick a delta of 0.20 or below. Now with option buying, I like to pick a delta of 0.80 or above. So it looks like this $7 strike is delta of 0.83. So it's saying that there is an 83% chance that Rocket Lab's stock price is above $7 by the expiration date. And here's why that's important. Because let's say Rocket Lab 338 days from now is still around $10, which means it hasn't really gone up and you haven't really made much money from buying this option. Well, as long as it's still above your strike price of $7 in this example, you can exercise the contract, which simply means you will go ahead and buy the shares. And then from there, you can hold on to the shares for as long as you would like. But again, that is still an option buying strategy. And because it is a buying strategy, you need the stock price to go in the direction that you need in order to make money. So if Rocket Lab's stock price doesn't go up, you don't make any money. Now with option selling, in the example that I use, I sold puts. I make money if the stock price goes up. I make money if the stock price stays the same. I even make money if the stock price goes down by a little, as long as it stays above that strike price. But even if it doesn't, I could just turn around and sell covered calls. But that's it for Rocket Lab. Now let's move on to the stock that I'm very bullish on. And that stock is, but wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full-time and generate multiple six figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community. Intuitive Machines, ticker symbol LUNR. All right, so I have Lunar's chart pulled up here. And you can see over the last year, it kind of shot up for a while and then it came back down. But if we could look in the last 2 months, so this low is, 2 months ago in August, the low was $3.42. And now it's currently trading at $8.28. And you can clearly see here that there must have been some great news, which is why it gapped up there. So let's take a look at why that was. So I have this article titled Why Intuitive Machines Stock Rocketed 62% Higher in September by Motley Fool. So shares of Intuitive Machines soared 62% higher in September, according to data provided by S&P Global Market Intelligence. The space exploration company completed its first lunar mission earlier this year, and in September, a multi-billion-dollar contract awarded from NASA propelled the stock higher. On September 17th, NASA awarded Intuitive Machines a near-space network contract with a maximum potential value of $4.82 billion over the next 10 years. As part of the agreement, according to the announcement, it will deploy lunar relay satellites and provide communication and navigation services that play an essential role in NASA's Artemis campaign to establish a long-term presence on the moon. CEO Steve Altemus said this contract marks an inflection point in Intuitive Machines' leadership in space communication and navigation. The award follows NASA's August award of a $116.9 million contract to deliver 6 science and technology payloads to the moon's south pole. And let me show you why that is super significant for them to get a $4.8 billion contract from NASA. Well, if we look over here at their market cap, they're just a $1 billion company currently. So the company is worth $1 billion, but they just received a $4.8 billion contract. You got to make it make sense. And you can see here that their annual sales, which is basically their revenue, is $79 million per year, which that is obviously about to skyrocket. No pun intended. Now, because it's such a small company, there are not very many analysts that are covering this stock. We currently have 5 analysts, but you can see they all have it as a strong buy. And if we look at the target prices, it has a high target of $12, a mean target of $10.60, and a low target of $10, while the stock is currently $8. So analysts see a ton of growth in the near future. So let's head over to the options chain to see how I would trade Lunar if I were to trade it today. So I'll stick with the same expiration that we did for the previous company. We'll do 30 days out. Now I'm going to sell a put again, but this time I'm going to be a little more aggressive because I like this company a bit more. So here we are at the puts. I'll come over to the delta again. So like I said before, I normally stick with the delta between 0.10 and 0.20. However, with this company, I want to be a little bit more aggressive. So I'm going to come here to this delta of 0.26. So again, a delta of 0.26 is saying that they believe currently that there is a 26% chance that Lunar stock price would drop below this $7 strike within those 30 days. And look at this, I will receive about $58 per contract that I sell of Lunar. And that would be a high return on my investment. And let me show you the calculations so you can see for yourself. So in order to calculate an annualized return when you are selling puts, this is how it works out. So it's premium received divided by money at risk. So we would receive $58 for selling that put. And at the $7 strike, we would have $700 at risk, quote unquote at risk, because every contract is worth 100 shares. And that 7 times 100 is $700. So divided by 700, and then that gets multiplied by 365 days in the year, divided by the time in the trade, which for us was 30 days, and then that gets times by 100. All right, now $58 divided by 700 is 0.082. And then 365 divided by 30 is 12.1. Times 100. If we bring this down, it would be 0.099, and then you times that by 100 to get a 99% return on your investment. As mentioned before, the market averages 10% per year, and you will get a 99% return doing this exact trade. I think the numbers speak for themselves, but hey, if you would like to get my exact trades and learn my exact options framework, please come join us in the Trade to Freedom community. Come buy your freedom back. It's a complete game changer. But the link is in the description below. I hope to see you there. But until the next time, peace.